The banking system is facing another crisis where central banks need to step in and save the day, and if not handled properly, a bigger recession or more bank meltdowns should be expected. Hi, my name is Sunny, and a quick like share alongside smashing that like button will be highly appreciated. Can a banking crisis cause a recession? It all depends what economists say is a wealth effect, where consumer confidence is declining and fear of recession is on the rise. Recent banking crisis was another blow to how most people feel about their financial situation because banking confidence is the key for US economy. When stocks fall, people tend to rein in their spending, which reduces retail sales that triggers a market reaction in return, and this negative cycle accelerates. As real income goes down because of inflation, banks tighten their lending standards because of rising rates by the Fed. A common man is squeezed in the middle. An economist who correctly predicted the great financial crisis says the world's central banks have chosen class war over financial stability. For sure, US Federal Reserve and other central banks have a unifying goal recently, which is to bring down inflation at no matter what the cost. But this approach has been questioned more lately as several high profile banks collapsed in the US as well as in the Europe. I believe the major culprit is rapid rate hikes in a very quick succession by the Fed. As a result, banks were left holding on to government bonds that have gone down in value as the rates went up, and now either they have to sell while booking a loss or register market to market losses on their balance sheets. By most measures, US economy is doing okay right now. There is a lot of speculation if recession is coming in 2023. I think it is coming, but I'm not sure about depth and longevity of it. Experts believe Americans need to brace for a thing called rolling recession, which they think is already in progress. In very simplistic terms, it means parts of economy taking turns as they suffer a slowdown rather than all sectors going down simultaneously. Frankly, recession by itself is not a very pleasant thing to go through, but such sectoral slowdowns at different time intervals have a long lasting repercussions on the economy and people's finances. Largest Swiss bank UBS is buying country's second largest Credit Suisse in a deal supported by government so as to avoid a major bank collapse that could trigger a wider banking crisis. European Central Bank welcomed the move, which will restore orderly market conditions while ensuring financial stability. Silicon Valley Bank and Credit Suisse have little in common given their difference in size, assets, clients, and even location. Rather, common factor is sentiment and lack of confidence in the banking system. Even though Credit Suisse never faced conventional bank run like what Silicon Valley Bank had to face, but its default swaps went through the roof, indicating markets are worried about its financial health. The current financial unease in banking system was sparked by collapse of Silicon Valley Bank that suffered a bank run after disclosing a loss caused by sale of its inflation hit bond portfolio. Panicked customers quickly pulled out their deposits, so without adequate liquidity, America's 16th largest bank collapsed mid-March. Usually banks loan these deposits to other customers while investing the rest because they make money on interest spread which makes deposits integral to their operations. US government had to step in to guarantee all deposits above and beyond FDIC limits. Consequently, other banks are now making plans if their customers pull back deposits. Some of them are rushing to shore up liquidity by borrowing US dollars as their biggest worry is fall in their deposit base. Several central banks have announced strategies to keep money flowing through global economic system where main goal is to avoid credit crunch that gripped markets during financial crisis of 2008. The US Federal Reserve enabled other central banks to obtain US dollars more easily, which they can further distribute to commercial banks in their countries. All this is designed so that there is an orderly monetary flow to other borrowers who need access to capital, which can range from mortgages, business loans, or even investments. This arrangement between two central banks that enables them to exchange their currencies is essential for uninterrupted flow of money internationally, which ensures adequate liquidity of US dollars in the market. But that is me, I might be wrong. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.